The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, my name is Jolene Schaefer and I'm the Marketing Coordinator for SWK Technologies. I'd like to welcome you to our webinar, 6 Steps to Sales and Use Tax Compliance, presented by Bethany Kay of Avalara and Rachel Lemieux of BDO. A little housekeeping before we get started. Everyone has been placed on mute to keep the background noise down. However, you can submit any questions you have throughout the webinar. To submit a question, look for the questions section in your GoToWebinar. We will address all questions between sections and at the end of the webinar. We are recording this presentation and it will be distributed tomorrow to all attendees as well as to those who registered but were not able to attend. Please take a moment after the presentation to answer our one survey question. With that said, we appreciate you taking time out of your busy day to attend our webinar. We're here to help you get the most out of your software solutions and help you find an easier way to run your business by providing you software and industry knowledge, tools, and support whenever you need it. We've invited Avalara and BDO here today because they are the industry experts on sales and use tax compliance. So whether you're here doing research for a new solution or you're just here to learn, we'd like to encourage you to ask any questions throughout the webinar. Lastly, as a quick reminder, SWK is constantly sharing important updates and software tips and tricks on our social media channels. So we encourage you to follow us on Twitter, LinkedIn, Facebook, and subscribe to our YouTube channel. Without further ado, I'll hand it over to Bethany and Rachel.
Thank you, Jolene, and thanks to SWK for giving our firms, both Avalara and BDO, an opportunity to present to everybody today on a very important topic for businesses nationwide. My name is Bethany Kay, and for those of you who haven't heard me speak in an SWK Empower conference event in the past 3 years, I manage our partnership with SWK, and I live in the San Francisco Bay Area. My background is as a CPA, a tax CPA, and prior to Avalara, I was a sales and use tax consultant. And today, I'm excited to expand upon the 15-minute presentation I did at Empower this spring. If you heard it, I decided to bring in Rachel Lemieux, who is a true tax expert. And even more exciting today is the opportunity to work with 2 of Avalara's most strategic partners at the exact same time. It's very cool that both SWK and BDO won Partner of the Year awards in their respective categories. SWK as top systems integrator partner and BDO as top accounting firm partner. So we're actually all partners together, and including SWK and Avalara being part of BDO's Business Research Network, which is a group of 100+ independent firms that provide professional services both to BDO and their alliance firms. And if you don't know, BDO is a top global 6 CPA firm that provides tax, accounting, and all sorts of consulting services. And I've worked with Rachel for the last 2 years, and she is a consummate professional. She provides really sound tax advice to our mutual clients and really makes work fun for both of us. And as for today's webinar, again, I want to make sure everybody has the opportunity to ask questions along the way that may come up. We'll address them either throughout or at the end we'll have some time for Q&A. And with that, I'm going to hand over the mic to Rachel as she takes you through the journey of 6 steps. And at the tail end, I'm going to wrap it up with a summary of what our products and services and solutions look like at Avalara. So Rachel, I'm going to hand it over to you.
Hi, good morning, and thank you very much again, Avalara, for naming us the Accounting Partner of the Year, and for SWK for our congratulations on their award and for letting us co-present here. Really do appreciate it. The topic of today's webinar is kind of your 6 steps to sales and use tax compliance in the world that we live in today. And so as a broad overview, what you see here is depicted is a 6-step process. Step 1 is the determination of nexus and filing obligations. You know, where do you have nexus where a state could subject you to their tax obligations? Step 2 is really determining the taxability of your products and services. Step 3 is the quantifying your exposure. You know, kind of what's out there, what do you need to do, and then how to mitigate it, and then talking about automation, and then what should you do if you do identify exposure, and then you know, beyond that, what would the future look like for you? So with that, we're just going to go ahead and get started with the next phase of the presentation, and that really is your nexus determination. So wanting to make sure that we, at its basic level, explain nexus, which is essentially your connection, the business connection between your seller and a state. Okay, if you have a nexus, then a state has the ability to impose its tax laws on you. Pre-Wayfair, hopefully everybody's heard about Wayfair now, but Wayfair was a case out of South Dakota that basically added the ability of states to impose new nexus laws, which were called economic nexus laws. Physical presence nexus still exists if you have a person or an independent sales rep or an affiliate that does warranty or repair or any of that type of thing. You've had nexus in that state. The new layer of nexus, which is on top of physical presence, is now economic nexus. And economic nexus can be imposed either on value, what are the value of your sales in a state, or it can, it's kind of an and or here, or how many transactions do you have in a state. And the transaction threshold and actually the sales thresholds are pretty low, and they were designed to be that way. So for instance, a value threshold could be as low as $100,000. And it could, but some states go higher than that because they recognize that, do they really want to have to be going after really small businesses who may only have $50,000 of sales in their state, as opposed to a bigger business that might have $100,000 to $500,000 in that state. But the transaction threshold has been a little bit problematic in that the transaction threshold is pretty low. 200 separate transactions in a state could subject you to a state's nexus laws. A lot of states have started getting rid of the volume-based threshold, just again, because you might have 200 transactions. You sell widgets worth 75 cents. You have 500 customers and they buy 1 or 2 widgets because you have the best ones in the country and they're very specialized, and suddenly you owe, you have now the ability or the obligation to collect sales taxes. So again, it's one of those evolving types of nexus, and I think over the course of the next few years, we will continue to see those value and volume thresholds change. But again, physical presence never went away. It can either be by people, or you have property in the state, or you have sales in the state. Go ahead, Bethany, thank you. So let's talk about keeping that in mind is how do you determine that, okay, and how do you apply that? Well, you do have to review your sales by state, okay, and that and you have to review all sales by state. So you might be a company that does wholesale sales, retail sales, a combination of services and sales. So you might do services and tangible personal property. So you really have to look at what are my sales by state and what kind of sales by state do I have? So and within that, do you have a physical presence in the state? And physical presence, everybody thinks they understand it, but now under work from home environments, that has actually expanded where you may actually have a physical presence. Like if you have a marketing employee or let's just say a tech employee in a state that has really nothing to do with your sales and how you do your sales, it's just like internal tech. Is that state now going to say that you have a physical presence for purposes of the obligation to register and collect sales taxes? So you really have to look now at all presence in state, whether it's physical or otherwise, and you definitely need to add in that layer of sales into a state or transactions into a state. And then compare that to where you're currently registered and filing. So that's how you kind of go through your nexus determination. So again, there's also other types of things that you need to consider when you are looking at it, because maybe you have nexus now, but are there other taxes and fees that you need to be thinking about? So are you suddenly now going to be subject to income franchise taxes, gross receipts related taxes, Washington, Arizona, Ohio, or hybrid type taxes in Texas and things like that. So those are the types of things you need to also consider when you're figuring out whether you have Nexus in a state, and also the type of entity that you are. We cannot forget that sales tax is, and the obligations to collect is on a per entity basis. And a lot of people get confused because for income tax purposes, right? When you go to file, if you're part of a larger corporate organization or you're an S Corp with multiple owners or things like that, the entity itself is the one that's going to bear the responsibility for sales tax. However, if you're a pass-through entity of any kind or part of a larger group where you file combined or consolidated, you need to consider those things because it may not be that you just created sales tax nexus. You also may now have other nexus for your owners. So you have to take all of that in there. You also want to think about your type of industry, and you want to think about the maturity of your company. Part of the reason why you think about maturity of your company is, are you a startup selling taxable items? Are you, a startup, and a lot of people think, well, I'm not making any money yet, right? So maybe I don't have any responsibilities. Well, that's not always true. Are you building that company to sell it, right? So you're the one that just came up with the latest, greatest app, and 7 months later, somebody comes down, swoops in, buys it, and you walk away with several $100 million because you have the latest, greatest new app. You have to think about those things as well. Or is it a family business that you want to continue to build to then pass on to future generations? Those are all the types of things that you want to consider. So with Nexus determinations, we like to ask people to kind of educate themselves, and there's a lot of different ways that you can do that. So for instance, on Avalara's website, they have a state guide to economic nexus laws. On the BDO website, we have a Wayfair page that kind of walks you through all the things to consider. Avalara has a sales tax risk assessment that they go through. It's at a very high level. And then BDO does a nexus analysis a little bit more robust that includes not only your sales tax issues, but potentially your income tax, as well as other taxes that you may be subject to. So there's a lot of information out there that you can go ahead and educate yourself on. And we've provided some links here, and I think that when you get copies of the presentations, those links will be live for you.
So we'll pause just for a second to see if there's any questions on Nexus before we go into taxability. It doesn't look like I see anything in chat, but it might flow in over the next few minutes. But go ahead, Rachel, you can go on to the next topic. Yep.
So let's talk about the taxability evaluation. Whenever you're looking at that, it's incredibly important that you sit down and take some time. What are you selling? Okay. Tangible personal property and taxable services, just tangible personal property, just taxable services, because it's important to understand how that state is going to look at and define, right, the taxability of what you are actually doing. Then you want to look at who your customers are. Is it an exempt customer, government, not-for-profit? Is the product that you're selling or the service that you're selling, has it been defined as exempt because of its use, right? Where are your customers, right? Because they could be in different locations, so you could get a corporate office ordering something, but you're going to ship it out to multiple locations, right? And then you have to consider tax holidays, right? You could make sales of school supplies, for instance. And find out that during certain periods of time, the sale of school supplies would not be subject to sales tax, but sales of those items outside of a particular defined time would be subject to sales tax. So that's an added layer of complexity that you need to add in. And then you really want to look at how your product is used, right? So you could have exempt customers, you could have exempt use. Manufacturing is one of the ones, and healthcare are one of the ones that come immediately to mind, in that a state may have defined sales of items to manufacturers are exempt because, even though they're using them, right, but they're exempt because they've just decided that they're going to exempt manufacturers from sales and use tax. It's all about politics and making investments in the state and things like that. And we have some very common pitfalls and that we want people to consider. One is called a bundled transaction. And in a bundled transaction, you are selling tangible personal property and you are also bundling a type of service with it. And when you bundle those things together and based on how you invoice them, it could turn a non-taxable transaction into a taxable transaction very quickly. So we need to make sure, especially if you're selling tangible personal property that's maybe worth 10% of the overall value of the entire product and service that you're selling, and really what your customer wants is the service. It's just happening to get tangible personal property. Well, if you can imagine 10% subject to tax, 90% exempt, but the way that you invoiced it, it got bundled together, and now the entire invoice is subject to tax. So we want you to take a look at that and consult with advisors to understand whether you really do need to charge sales tax on the full price, or are you able to structure that transaction differently to maybe have only 10% subject to tax. And then our favorite is drop shipping. Now, drop shipping is can be a very complicated process. So for those who may not understand what drop shipping is, it's a transaction where a seller accepts an order from a customer and then places the order with the order with a third-party supplier. So typically with a manufacturer or wholesaler. So customer contacts the retailer contacts the manufacturer or distributor and directs the manufacturer or shipper to ship the goods right directly to the customer. Then what happens is the manufacturer and supplier bills the retailer for the wholesale price, and the retailer then bills the customer for the retail price. And the state's rules that must be followed and the tax that applies in that state is where the goods are delivered to the customer, so to the ship-to state. But here's the deal. There are three parties, right, commonly in a drop shipment transaction. You have the seller, the shipper, and the customer. And it is very crucial to understand, right, this tax treatment during each stage of that transaction, no matter what your role is, right, in it. So again, sales tax is typically imposed on the final consumer, and the retailer should be able to purchase items it sells exempt from sales tax, right, under a resale exemption. And that's simple when it's just between the seller and the customer. But when you add in that third party, right, is when you can start running into problems. So you have to look at also, so for a drop shipment transaction, when the retailer doesn't have Nexus, right, and is therefore not registered to collect sales tax in the delivery state, most states, not all of them, will say that the manufacturer who does have Nexus in the delivery state, they can accept alternate documentation to substantiate a sale for resale to the retailer. Otherwise, if that doesn't happen, then the manufacturer and supplier is required to collect tax, even though the retailer, right, is making it a sale for resale. So it's complicated. Not every state does it the same way, of course, right? And this is where I'll put in my pitch that I normally talk about is, and the numbers vary, but really there's at least 12,000 taxing jurisdictions. There can be up to 60, but for sales and use tax, I like to talk about 12,000 taxing jurisdictions for state and local taxes in the United States. And wouldn't it be great if all 12,000 were exactly the same? But that is in fact not the case. So the biggest thing I can say about drop shipping right now, it's complicated. And of course, not all states administer it the same way. So do we have any questions on drop shipping before we move on? Because that can be not a fun area for any retailer, manufacturer, or wholesale distributor to deal with.
We do have one that's come through the chat, Rachel. How do we know the company/seller have Nexus?
Gotta ask. I mean, here's the way that would normally happen, right? Is the seller is going to get an invoice from the shipper, right? And they're going to go, whoa, why are you charging me sales tax, right? It's really a sale for resale because I do have Nexus in that state, so I'm going to collect tax from that buyer, but unless they communicate with each other, right? The manufacturer, and here's another way to think about it. This is in its most simplistic form. Every sale of tangible personal property is subject to sales tax unless it's not, okay? So by default, every time there is a sale of tangible personal property and of course certain services, right? The seller needs to put sales tax on that invoice. The only way to not put sales tax on that invoice is if there is documentation substantiating that sales tax does not need to be collected. So a manufacturer who doesn't know the status of the actual retailer, when they bill the retailer, right, they're going to put sales tax on it. Yep. So it's really up to the retailer to provide the shipper, the manufacturer, wholesale distributor, with a sale for resale exemption certificate. If those transactions don't happen, then you need to charge sales tax to whoever ordered it from you, because it's not the customer ordering it from the manufacturer. Remember, it's the retailer ordering it from the distributor or the manufacturer and having them ship it. So how do you know? Well, you're either going to charge them sales tax or you're going to ask for an exemption certificate of some kind. And a lot of people say, oh, we don't really, I mean, it's pretty clear that's what was going on. A state doesn't think it's pretty clear. But the manufacturer is being audited and they pull invoices, purchase orders and whatever, and take a look at it and say, you didn't charge sales tax to this company, right? Where's your, why didn't you charge it? Because we don't find a corresponding exemption certificate. They're going to impose sales tax on the manufacturer, right? So real substantiation is super important in these transactions.
Yeah, and I imagine of the attendees today, quite a few this applies as manufacturers and distributors. Drop shipping can be a real sticking point for sales and use tax compliance.
Right. Any other questions on that one? Again, I can't stress enough that when I'm doing due diligence work for companies, and they're like, well, of course all my sales are sales for resale, and I'm like, where are your reseller certificates? And they're like, we didn't get them. Well, guess what I have to say, especially if I am doing buy-side due diligence, I'm going to say they owe a lot of money and you need to work on that purchase price, right? Because they owe a lot of money, even though it would be pretty clear to any normal person that they were sales for resale. States don't care about that. They want substantiation. And without it, sales tax is going to get assessed. Then you got to negotiate your way around it. So, okay, so exposure quantification. I'm sorry, was there another question?
Yeah, sorry, Rachel. We do have one more that's come through. A client buys for their client from a reseller, who then orders it from the distributor who drop ships it. Will the exemption forms flow through to the distributor if the distributor has Nexus?
Everybody has to have an exemption in the chain. So no, it doesn't flow in at a high level. Yes, it flows through, right? But each party in the transaction needs to have the substantiation. Okay, so so it's each party that has to have it. You can't have one party go ahead and say, well, here's the reseller certificate. Here's a copy, because they don't have authority to give that reseller certificate, right? Somebody else's reseller certificate.
Correct.
Those are very legal documents. They get signed in good faith. If you provide something and you don't have the authority to provide it, that's not in good faith, and there could be a breakdown somewhere in there in terms of tax being assessed where it doesn't need to be assessed. So each party in a transaction like that needs to have its own substantiation of the transaction. I hope that makes sense.
Good question. Speaking of exposure.
Yeah, exposure. So you're going to want to quantify your exposure. So you've gone through and you found out that, yeah, I might have Nexus in all of these other states, so I have to look at my exposure quantification. So you gather your historical data, right? We usually typically go 3 to 4 years because of statute of limitations in states. They differ anywhere from 3 to 7 years, sometimes longer, very nominally if it's going to be long. There's California 10 years, sometimes Hawaii a little bit longer. So we usually go 3 to 4 years on average. Then you want to quantify, right, what that is. So, and there's interest and penalties, obviously, that get added in. And then, you need to think about what are your, your risks. But before we get there, we want to talk about maybe testing, because if you figure out that you owe sales tax in, let's say you're currently reporting in 10 states and now you should be reporting in 23 additional states, right? What are you going to do there? Do some test periods, figure it out. And rather than pay your CPA or tax advisor to quantify something that, to the penny, you look at it and you go, well, my biggest sales of the 23 that I need to add, the biggest sales are in these additional 13 states. So maybe we just start with those 13 states. This is typically what a finding that you are going to get looks like. And I know this is a little small to see, but you'll have the list of states, the type of nexus that you created, typically when you created it, and this is where the Wayfair analysis comes in big time, right? Because physical presence has always been there, but Wayfair hasn't been here that long. So you want to make sure if you didn't have physical presence, when did the Wayfair analysis start? And then you kind of get in and you go to, am I filing returns, not filing returns? What are my taxable sales by year? Then what are the tax rates? You got to know what the tax rates are every year because they change, right? And then what are taxable sales? And the only thing I want to say about taxable sales for Wayfair analysis purposes, you have to know how a state quantifies the volume and the value. So for value purposes, they may say all your gross receipts are part of the calculation. Only your taxable receipts are part of the quantification. And then of the other ones, do you have exemption certificates and things like that? So you want to pay attention to they're called safe harbors, and you want to pay attention to those because you may be in one state where they only want taxable sales and you only make wholesale sales into that state, okay? And you have the substantiation for that. If it's into a state that says we count 100% of your sales, whether you even make a retail sale or not, because that could still all be wholesale, but they're still going to require you to register and potentially file 0 returns because you don't have taxable sales. So it's a frustrating part of this because, again, no consistency, right? We have 45 states that impose the sales tax, no consistency. Go ahead, Bethany.
The links we provided to both of our websites really help, a viewer to get an idea of what the state-by-state requirements are. So you can, if you're doing business in a handful of states, you can look at our charts, which will tell you what's included taxable or exempt sales or services and
right.
what those thresholds are. It's really helpful.
That's out there, that's out there, easily researchable. Just about everybody, all the big accounting firms, Avalara, they have put that information available out there. So there's really no secret sauce, so to speak, on that. And I want to pay special attention to the very last column, which is recommendations. It's called Path Forward here. You'll get different charts depending upon who's doing it for you. But this is one that can really help you when you get to your tax advisor, and that is, what should I do based on this level of exposure, right? Should I go through a voluntary disclosure program, or should I simply register, pay the pass, maybe ask for a penalty waiver, right? Maybe they will, maybe they won't, but should you really pay for the voluntary disclosure services if the cost to do the voluntary disclosure is going to be more than the penalties and interest? And tax is tax, you're going to owe that no matter what, right? But should I go ahead and just pay the penalty and interest or ask for a waiver and see if they'll do it? Because the cost of voluntary disclosure costs more than what that is. So cost benefit is really there. And then yeah, go ahead.
Can you define VDA's voluntary disclosure? Or I don't think we did that, and that might be really helpful for the audience.
Right.
To know what
So voluntary disclosures are when a company voluntarily comes forward, usually anonymously. Not all states allow anonymous, or they require disclosure within like 15 days. But you can anonymously come forward and say, I have discovered I have tax liability in your state. I would like to negotiate a deal based on your parameters, maybe some other special parameters I have. And I'm not going to tell you who I am until this deal is sealed, right? And once the deal is sealed, then you say, okay, here's who I am. And here's my calculations of my exposure. And the state says, great, pay us this amount of money. And the look back period is usually limited. If they find you first, look back can be infinity.
Yep.
So, you really need to weigh, should I go through voluntary disclosure, especially if my liability is really large? But this chart right here only really talks about sales tax, and that's where considering all of your other taxes and fees that are transaction related, things like that. You need to take those into consideration because they're usually included in a voluntary disclosure, and especially if you're a pass-through entity where your exposure can go to your owners, right? Sales tax and income tax. So you want to protect your owners as well.
Great.
Yeah, go ahead.
No, I said great point. That's really important. A lot of our clients and prospects don't understand the liability exposure for pass-through entities.
Right, so all we ask you to do is to say, if somebody's saying, let's do you a sales and use tax voluntary disclosure, your question then needs to be, what about the other taxes? Okay, and just to make sure that that is being looked at, okay? So part of exposure quantification is your evaluation of risk, right? So, what's the detection risk by the Department of Revenue? What does that really mean? Well, your suppliers, your customers, they can be being audited, and they can find you through that audit. So, it happens, and it's happening more and more because of the advancements in technology. And finally, the Department of Revenues and the government's catching up with that technology, right? Little by little, the states are getting just as technologically advanced. They're usually a few years behind, but they're getting there, right? Information sharing, all of those kinds of things. Use tax notification penalties, those can be huge, right? I mean, when we went with marketplace facilitator laws out there, if you failed to notify a state that you made sales to certain individuals, sometimes the penalties on that were much larger than the actual use tax that would have been due, right? So you got to pay attention to that. Key TAM lawsuits, a lot of people don't know what those are. There are people out there, I kid you not, that surf the internet. They go to retailing sites, they buy small things, and they look to see if sales tax is being charged. That's one thing. And if it is being charged, is it being charged at the proper rate? So you have a lot of people out there who will say, I don't have the time, I don't have the inclination to kind of figure out where all of my local sales are going to for purposes of determining my local rate. So I'm just going to charge the highest state rate, state and local rate. So I'm going to charge 10% instead of the 8.2 that it should have been. The people who find that go to law firms and file what are called key TAM lawsuits. And what the advantage of them doing that is, for every dollar, right, that the state is able to recover as a result of a problem, okay, that person who brought that forward gets a pretty big percentage of the dollars recovered.
Wow.
Right? And especially if you did like a 10% sales tax rate versus an 8.2, they're like saying you way over collected. Now this is a torturous thing. Torture us, not torture us. and so they get rewarded for turning in companies that do the wrong thing. It's awful, and that's really kind of the class action lawsuit goes on, right below that. Reputational risk, man, you do not want to be the one on the front page of your local newspaper or national newspaper or on a social media site as being someone who charges too much, doesn't charge, whatever it is. You don't want that out there because, with just the advancements in social media and all the ways that people can complain, that could damage you and you could lose sales because of that. And then of course, regulatory risks, right? You're just not complying with the law. So mitigation and disclosure, actually, really, really good things to think about here. So you gotta know, does my state have a voluntary disclosure program? I'm gonna say the vast majority of states do. Do they have amnesty programs? There is a difference between amnesty and voluntary disclosure. And it's important to understand those differences. I won't go into that right now, but amnesty programs can come up even if you are registered and collecting in the state, but you found a problem, right? And maybe you weren't collecting enough. Maybe a whole month's worth of data went away, or or whatever it is. Amnesty programs typically allow you to, even though you are registered, to go ahead and apply for amnesty and get that protection. Also, if you've never been registered and there's a very short period amnesty program where they say we only want 2 years of tax, on voluntary disclosure normally wants 3 to 4, but we're going to let you come in and only pay 2 years. That was very popular when Wayfair first came in. So know the differences there, and it's all going to be taxpayer fact specific, right? So you got to pay attention to how you request, right? There are online applications, like we say there, and in Washington online, that type of thing. How long is the look back period? Like say Hawaii is 10 years. That's an ouch, right? And they have a gross receipts related tax, so big ouch there. And then kind of what do you have to disclose? Now Washington, right, the state that I'm from, wants to know every affiliation that you have in your corporate tree or your organizational tree, and that doesn't matter if it's a 1% affiliation or 100% affiliation. So we don't like that, and we don't think it's legal, but they sure are imposing it. And so we have to, work around that. And then again, consider all of the other taxes. Okay. Go ahead, Bethany.
Getting towards Avalara here. Tax system.
We are. Tax system selection and implementation. Very, very important to kind of think about this. So you want to evaluate. So you're talking about, I have a problem. I want to correct my problem. So, I'm sitting over here doing mitigation, but now I also want to make sure that I'm doing something really good for the future so I don't get into this problem again. So you want to evaluate, what do you currently have from a technology? Do you already have indirect automation software? How old is it? What does your service contract look like? Do I have the people in place who really understand how it works, how to make changes, how to upload updates and things like that? What's the current cost, right? And how do what's it like today? So you may have ordered something a long, long time ago and have been having to really do patches and and whatever. So you really have to look at that. Make your own scorecard or ask somebody to help you make a scorecard. So you're going to go out and you're going to say, what do I have now? What's my ERP system? What is available out there? How many exempts say, all of these things, and you're going to match that to what all these software companies out there say they can do for you, right? What does their taxability matrix look like? How big is their catalog? And what I mean by that is, have they taken the time to really go out and say, there are millions, gazillions of products and services, and the states tax them all differently? Is there, within their taxability library, I'm going to say, are they able to pull out something that says Hawaii does it differently than Washington, that does it different than Idaho, that does it different than New York? I mean, are we able to pull codes out? So based on where you're making your sales, you're always going to have the right taxability determination. And then what are the integrations that are built into that software, right? What I mean by that is, do they have to create something for you, or with what you are using, whatever shopping cart you're using, the software company already has a relationship, it already has that API, it's able to just bolt it on without a lot of manipulation. And then, is it easy to use? That's the other big thing. You don't want to buy something that everybody looks at it and goes, I don't know how to use this. It's not intuitive, and that kind of thing. And then what kind of support is available? Are you just buying a license and they say, good luck, have fun? Are you buying a license that has added on different levels of customer service? Because obviously you're gonna want to have that phone a friend, right? That's out there that says, I need help, something's not working, my calculations aren't coming out right, whatever. Create that scorecard and then talk to that software company. Can you do all of these things for me? And talk to more than one software company. So again, there's really 5 aspects of implementation, right? What do you need? How can you map it out? Will it integrate well with what you already have? Is it easily configured, or do you need to hire somebody to come help you? Once you test it, right? Is testing going well? Can you break it really quickly and then figure out a way to fix that, right, easily? And how long is the length of time from implementation to actually using it? So those are the things that I wanted to talk about today, and I'm going to turn it over to Bethany. I'm going to pause. Are there any questions that we can answer right now before we kind of move into actual software automation?
There was one that came in as a follow-up to the last question, Rachel. So does the distributor need copies of all exemptions?
Yes. Hey, I do presentations all over the world, and my mantra is substantiation and documentation. In the absence of substantiation and documentation, a state taxing or local taxing, if you do business in Colorado and some of these home rule states, right, If they don't see the documentation, they will assess. And it's not your tax to bear, right? It's your customer's tax to bear. But if you don't have that substantiation, they're going to go after you. They don't care what your relationship is with your customer.
Yep.
Right? So I can't stress enough, over document, over document. Back in the day, real quick, Bethany, back in the day, we used to be able, I'm an old Department of Revenue person. And back in the day, we would bring in my opinion, some business sense, and we would say, clearly, shoe manufacturer, you're selling 5,000 shoes to Nordstrom. Clearly, that's a sale for resale, okay? Clearly. But these days, they're going to come in and they're going to say, well, we don't know if you're buying it for resale. I mean, Nordstrom has tons of employees. You might actually have just given them or sold them shoes for all their employees, right? That's ridiculous, and I get that, but that's not how it is these days. It's audit by clerical error. And that is what's really sad, is we have moved into audit by clerical error. If you don't have something, even though the transaction is very obvious, they will assess tax. It's almost like you want to do a lessons learned. I had a company in Michigan, and unfortunately, they didn't collect any of their substantiation, and it was so clear that these were sales for resale, and they said nope. And something we found in the files when we were doing this due diligence, I was doing a sell-side due diligence, in the files I found that they had actually been told this in an audit 10 years ago. So not only did they get assessed sales tax again, they got assessed a 50% not following instructions penalty. So, you know,
the penalties could be worse than the tax.
500,000, substantiation and documentation, you have to have it.
Great example, Rachel. I really appreciate your full overview of the journey that all our customers and clients go through. I will say, when it comes to the the automation piece, I typically, when I'm just talking with prospects in our sales team, there are really a couple of important things that I think potential customers of ours should really consider when choosing a vendor. One is, choose a vendor that your partner knows well and has worked with for years. So SWK and Avalara have worked together for over a dozen years, and they can provide you, hundreds of clients that utilize our platforms. And actually, both SWK and BDO are what we call certified implementation partners. So they have been trained and certified by Avalara to implement our solution. SWK has particular expertise in Sage and Acumatica ERP integration, and this really makes the experience of onboarding, you as a customer with Avalara much smoother, because they know your business, they know your people, they know your systems, and they know the nuances of the sales process where you need to collect tax. And secondly, I would say, choose a tax vendor that's positioned to grow with you, a vendor that integrates not just your systems today, but maybe as you change and grow, add new companies, get acquired, grow with you tomorrow. So I'd like to just start, this is going to be a quick summary. I've got about 10 minutes or less, just sharing some really important statistics about Avalara, so you can get your arms around who we are as a public company today and the kind of relationship that we have with our customers. Avalara, we hear this every day, not every day, but when we have company meetings, that we have the mission to become a global compliance platform, and one that ensures businesses have access to tax compliance globally, worldwide. We're growing super fast. We've been in business for over 16, 17 years now. We're building and developing integrations both in-house and with our partners. We're continuing to acquire businesses. I think we acquired 6 businesses in the last year. And we're growing and enhancing our solutions globally, and we're hiring the best people to both support our customers and our partners. And then this, I think, is really the most important thing I would highlight as well about Avalara, and that's, we have over 1,000 pre-built integrations to Avatax. If you ask our competitors, they have nothing near what we have. These integrations include ERP and billing systems like Sage and Acumatica, POS systems, e-commerce platforms, marketplaces, And internally at Avalara, we like to call this our moat because it really protects us from our competitors. And for our partners that have tax technology practices like BDO, they regularly share with us that this is our greatest asset and selling point because we have so many integrations to systems that our competitors don't. In fact, it's rare that I get a call that says, I have some system, do you have an integration? It maybe happens a half dozen times every year, and it makes us a very, very sticky product. Okay, so moving on to products and solutions, our summary. You know, there's a number of interactions that happen between businesses and governments, right? The governments are enacting new regulations, they're sending notices to companies, they're performing audits, and businesses not only have to register, they have to get tax exemptions from their customers or suppliers. They have to report and remit their tax returns, pay the jurisdictions, manage the notices, and deal with audits as they come. Our Avalara Compliance Cloud platform really helps to simplify and automate all of this that's coming at a business, right? And we have really 6 product categories. The first 3, starting, going clockwise, calculations, returns, and documents are really our 3 core products and services. AvaTax, which is our calculation engine, returns, which is returns, tax returns, and then documents, which is typically we're referring to Cert Capture.
And I will say, in terms of the documentation software, anymore, I think if you're a reseller, it's incredibly important. This part of automation is incredibly important because it's built in. It manages. It knows whether it's an annual, needs an annual re-up, whether it's perpetual. All of that, and it provides you with information, right, on I need to go back to these customers to get a renewed certificate, or so I can't stress enough how much document management is today, right? It's just as important as calculations. It's just as important as filing returns. Cert Capture is, I think, one of the most important things that large resellers need to be thinking about.
Thank you, Rachel. So for the calculation engine, which we call AvaTax, that's your single source of address validation, which is actually incredibly important, eliminating the need to deal with third-party vendors, automatically assigns your tax jurisdiction to get the right rate and know also where to file the returns without any user intervention, and it uses latitude, longitude. It maps your product inventory master to our Avalara tax content, which Rachel described as being incredibly important. We have a robust library of tax content. So it really eliminates that need to manage your rates and rules and all the content of the products that you sell. And it includes also our, I think it's 150 plus out of the box reports on demand. And on the left-hand side, you see, in addition to manufacturing, distributing, retail, software, and hardware, a lot of us don't know that we provide tax calculations to really specific industries. Some of you may be on the phone in energy and tobacco, communications taxes, which are really complex, and beverage and alcohol and lodging taxes. As well, we can do VAT and GST calculation and have a robust solution for use tax. Okay, returns, not that complicated to understand. It's, preparing, filing, and remitting returns. This is all automatically done through our platform with outsourced payment to the state and local jurisdictions directly through Avalara. We can also clear up tax notices on behalf of customers, and we can provide a archive of the returns.
And important in the returns is, remember, not every state says that the returns are due on exactly the same day, right?
Yeah.
So what happens here is when you have anomaly states that have like a 13th month, or whatever it is, some states are the 20th, some states have prepayment discounts, all of those types of things. The automation builds all of that into it, and so now you're not having to keep track of what day is the return due. Do I get a prepayment discount? Those types of things. So
that's a great point. I mean, the really managing, and especially for companies that have Nexus state, nationwide, managing that filing calendar, which could be monthly for some states, it could be quarterly, or it could be annual. That is a headache, complete headache. So this really takes that burden away from our customers doing that manually. You know, for customers with global requirements, we can do VAT reporting, e-invoicing, and live reporting, as well as India GST and Brazil returns, something to consider if you have a global footprint. And Rachel mentioned the value of Cert Capture. Again, I was going to say, for those of you on the phone that are manufacturers and distributors, this is your greatest audit risk for exempt sales. And Cert Capture basically manages the life cycle of exemption certificates for both sales, consumers, consumer use, excise, communication, and lodging taxes, collect the certificate directly from the customer through automated email campaigns. It stores and you can retrieve those certificates online very easily, especially during audits. It tracks the customer responses, reports on the expiration dates, which, like everything else in the world of sales tax, varies state by state. And then it also gives you an analysis of your exposure relating to exempt sales. And then just for the three on the right, I would say business license is probably the most relevant to all of our customer base. It's a really critical first piece in becoming compliant. With our business licenses and registration service, it allows you to fill out a single form specifying all the jurisdictions where your business has sales tax obligations. And then it's a really simple and quick registration process. It's a great service. And in fact, some of our accounting firms utilize this as well with their clients base. We can also do fiscal representation for clients selling in the EU that don't have a physical presence in Europe. And for this category of content, data, and insights, it allows, we have an ability to streamline your product classification from UPC code mapping to international item classification for cross-border transactions. We also mentioned earlier that we have a sales tax risk assessment, which we provide for clients that don't do like a full-blown Nexus study with CPA firms. Again, it doesn't include income taxes and other taxes. And lastly, we acquired a company called TTR, Transaction Tax Resources, out of Oregon just this last year. And essentially, we can provide a tax research subscription, which provides really concise answers for audit defense support, the tax explanations, and all the relevant statutes and legislation. Some clients need and want this a part of their holistic solution. So our compliance platform is really a truly vast content database. I mean, that's what you're buying into here. It's secure. It's a reliable infrastructure. We have robust APIs. And again, I already mentioned our 1,000+ integrations. We have a security operations and global engineering team working 24/7 to monitor all our services, which are hosted on AWS platform. And this provides native redundancy and failover capabilities, which are extremely important to our retail customers in particular. We have a huge team of content research specialists. So they're the tax researchers who are constantly mapping changes to the tax jurisdiction boundaries. They're monitoring the rule changes to the taxability of products and services. So they're growing our database daily of very item-specific tax rates and rules.
On the tax jurisdiction boundaries, I don't think a lot of people kind of understand what that is, and so I'm just at real high level. Redistricting, it's like redistricting for voting, right? People get in there and they go, you know what, we're gonna, so for tax purposes, what happens is a county ends up becoming more and more absorbed into a city jurisdiction boundary, and that can change, obviously, address to address, what is the local tax rate that must be charged. And so the fact that our automation companies keep that up to date, that's hugely important, because you could be charging the same rate of tax, not understand that there has been a slight change, or understand that on this side of the street, the rate is this, but on the other side of the street, it's this. It can be zip code dependent, all of that. So the automation companies keep up with that, and it really keeps people out of trouble in terms of what rates they're charging. Because if you go back to the key TAM lawsuit we talked about, this is one of the easiest ways that can happen, right? Is to mischarge based on the fact you missed that there was an annexation into the city of a certain small area.
Thanks for that, Rachel. I appreciate it. And I've already talked about our 1,000+ integrations. I think this is the 3rd time, so I'm not going to repeat that. But lastly, but not least, we have a robust and flexible API. So if you have a custom built solution that we don't have a pre-built integration to, our API gives a really fast time to market with great documentation and robust developer toolkit. So in a nutshell, that's who we are and what we do as an automated solution. That is compliance with Avalara. We are at the end of our presentation. I think we've got like 4 or 5 minutes left for those attendees on the line. I know we've thrown a lot at you today. We are available for any questions that you might have at this time. And if you think of it later, you of course we'll provide contact information for both Rachel and I. Rebecca or Jolene, anything in chat that you have noticed?
Thanks, Bethany and Rachel. We'll now open it up one last time for questions. If you have any questions, please enter them into the questions section of GoToWebinar. And it looks like we do have one more that's come through, Bethany and Rebecca. Where can I get more information on Nexus?
I like to call it Professor Google. Sorry. There are any number of places that you can find information. So we provided links very early on in the presentation, Avalara's website, BDO's website, literally. And I know I joke about Professor Google, but there is really good information out there. There's really bad information. So I would tend to look at an accounting website or a reputable indirect automation website like an Avalara. I'd stay away from, I don't know, some really, it's hard to identify sometimes, but Steptoe and Johnson is a good thing. Diane Yetter is another good one. So there are some key people out there in sales and use tax for Nexus purposes, including income tax Nexus and things like that, where you can get very generalized information. However, I want to stress that your business, what you do, how you do it, all of those things can take all that general information and make it not applicable. So if you're just looking for high information on what Nexus is, you can always pick up the phone. I'm always, I love to talk state and local taxes, and I don't charge if somebody needs to know something, right? So I charge when it starts becoming a project. So if you just want to pick up the phone or email me or whatever, I am happy to talk Nexus with you.
And I just, since you mentioned email and phone, we'll distribute, Jolene and Rebecca will make sure we distribute this deck for everybody as they can look at and review the slides if they want to take it to folks in their firms, their companies to share. But our contact information is here as well.
And for the next few months, while we're still in Seattle in a work from home environment, because our offices are being remodeled at the same time and we're not ready to move back yet, I highly suggest email for me. My work phone doesn't always come to me. So I don't know what day of the week it's going to work or not work. So email and I will respond promptly.
Yeah.
Perfect. And that looks like all the questions we have. So give me 1 minute as I take back screen control.
Thank you.
Perfect. So thank you so much, Bethany and Rachel, for your informative presentation and for taking the time to be here today. For more information on Avalara, check out our website at swktech.com and select Avalara under the Sales Tax section in the Products tab. Thank you everyone for attending our webinar. Have a wonderful rest of your day.
Thank you.